Hey there, this is Alex Kluge. I'm here from Toronto Home Experts, and I'm here to dive into the April 2022 Toronto real estate market update. Okay, so before we begin, I just wanted to just say a few things. And really, what we want to do today is actually dive into what the numbers are saying and what's actually happening in the marketplace. I know there's been a lot of negative press recently, mainstream media, social media, saying that prices are really coming down, the market's really changing and all that sort of thing. And I'm here to tell you that the market is softening. There is some softening that's happening in the market, but it's not like that across the board. So it's really a tale of micro markets, I think. Certainly Toronto, the 416, downtown, midtown, and sort of the premier pockets of Toronto have performed exceptionally well over the last 3-4 months, whereas we're seeing a softening in the 905. So Durham region, we saw some declines. York, Peel, same with Halton region, and so those regions are being affected more significantly. And why is that? Like, why are those areas? Why is the 905 more affected than the 416? Well, if anyone was watching the videos that we were producing roughly a year ago, we were seeing there was a flight of people moving to the suburbs. So, either people were selling their downtown condos and moving out, to Whitby, or maybe they were moving out to Mississauga. Whatever the case may be, there was a real flight to the suburbs. Well, now I think we've kind of reached a tipping point where those areas have increased so dramatically, and we're going to get to the numbers shortly, so dramatically during the pandemic that the 416, or like Toronto proper, really lagged behind a lot of the sales activity, price change, and volume that we saw across the board in the 905 region. So, okay, so let's talk about sales volume first. And really, what we're seeing year over year is a pretty steep decline in sales volume. Don't forget, we were looking at April last year. So that was a record month for sales volume for the month of April. And now this is the third lowest April on record over the last 22 years for sales volume. So pretty stark difference. And so why is that? Well, I think there's a combination of different things. One was what I just talked about, softening in the 905 area. So outside in the suburbs, we are seeing a shift, no question. And I also think it's the rising interest rate environment that's really affecting the market as a whole, but specifically in the 905 as well. And what do I mean by that? So, as we know, mortgage rates have increased since the start of the year. So, fixed rates have certainly increased. The variable rate mortgage, so the prime rate, was increased last month, and so by 50 basis points, which is obviously affecting buyers qualify. But just to give you some hard numbers and just some context in terms of what that means. So if a buyer went to get a mortgage pre-approval in January, and that same buyer got a mortgage pre-approval in April, the buying power for their mortgage pre-approval, because of the rising interest rates, has decreased by 10.5%. That's a pretty significant change over such a short period of time. So really what we're seeing is fewer buyers qualify due to higher rates. And there will be, the consensus is there will be higher rates coming in the near future. Bank of Canada is meeting on June 3rd, so that's we're likely going to see another 50 basis points increase there, most likely. And also, likely we're going to see an increase in the fixed rate side because bond yields are rising. So that all coupled, with what's happening, economically speaking, there's a little bit of a softening, no question. So I'll get into what's happening in the different areas shortly, but this is my take on what's happening with sales volume and why we such a steep decline in sales volume. So active listings is another interesting barometer to look at. So when we're looking at active listings year over year, like there's a pretty big difference. And if you remember what happened last April, it was an extreme seller's market. And now with an increase in active listings, it's providing a little bit of a dampening effect, if you will, on the market as well. But when you're looking at these stats in a vacuum, it would indicate that we're still in a seller's market. That is true for Toronto. That is true for most areas in the 416. Certainly in the prime, like downtown, midtown. What I call the like AAA neighborhoods of Toronto. That is very much the case. That there is still significant demand, and we are seeing record pricing in these pockets. When we get a little bit further outside the core, that's when we see things, a little bit of a shift happening, if you will. So new listings, when we're looking at new listings, they're down 11.7% relative to where they were in April of last year. So, that's coming to say, in line with what we're talking about with, active listings and sales volume there as well. When we're looking at those in a vacuum, it would indicate that, we are seeing a little bit of a shift. I think that's the right word. There's certainly not a crash that's imminent. Certainly, I'm not seeing that. But we are seeing certainly a dampening happening in the marketplace. So average price, and this is something that gets a lot of press. Certainly when prices are changing significantly month over month, there's no question that we're going to see quite a bit of press that's being made, and that's totally understandable. But we have to remember. Let's look at where we were a year ago, right? Like we did have a huge run up in price in 2021. But if you look at a year ago, this is the Toronto Real Estate Board. So all of the GTA, or what's considered under the Toronto Real Estate Board, average prices have increased by 15%, which is, a fantastic year. And when you look at years when we've seen a 15% increase year over year, there's not many of those that happened over the last 22 years. So bear that in mind. Having said that, you really want to look at what I talked about earlier on the video is, it's really a tale of micro markets. So the downtown core is in Midtown, AAA areas is up actually when you look at month over month of 2%. So Toronto average prices are up 2%. But when you look at outside like Durham, York region, they're down month over month 6%. And then you look at Halton region is down 8.2%. So does that mean that like average prices in Halton, or like if you've got a house or condo in Halton region right now that has gone down 8.2%? No, that's not at all what it means. But it certainly means that there's a softening happening. Like obviously when we're seeing average prices come down, that would indicate certainly that that's a distinct possibility. And certainly when you're looking at, more targeted metrics like average days on market and active listings in those individual areas, certainly we're seeing a softening. But what's interesting with you look at what's happening in Toronto, and what I talked about earlier, like Toronto's playing catch up. I really think that's what's happening because really we did see year over year appreciation when it comes to Toronto proper real estate, but it'll certainly lag behind like what we saw in the 905 region. So average prices in Toronto from December until now are up 15.8%, right? That's significant. So, when we talked about the huge run up in price and the like lack of inventory in our videos in January and February, we saw some pretty significant gains there. And that's exactly what's happening in Toronto right now. So will it continue? It's hard to predict, but I do think we're going to see a little bit of a lull or a little bit of a flatlining, because we can't see this type of increase, over the next quarter or 2 quarters. Certainly that would not be realistic, especially in a rising interest rate environment. But certainly it's not unreasonable to think that, we've had, solid appreciation relative to what happened in the 905, primarily due to, COVID's impact on real estate transactions over the last couple of years. So everyone that knows that I love the HPI, the Home Price Index, it's one of the best benchmarks to look at when it comes to price increases in a specific pocket or area. So we look at these numbers; they're pretty significant year over year, right? Like Durham region, 37%, York, 34. Like when I say like average prices have gone down like 8% in over a month, you know, is that really the worst thing in the world if like prices go down, average prices go down in Durham region and York region by 10 or 12%? Like we'd still be up by like 24, 25% year over year. Like that's a significant increase, right? So again, not sustainable long term, but we have to look at context. Like, real estate is not as liquid as like a stock would be. And so like, when we're looking at stock prices, they change, every minute. Whereas, real estate prices in a specific neighborhood, demand certain like a minimum volume to happen to really understand where is their trend. Like if there's one sale that's an outlier, that doesn't make that a trend. Typically you need to see 3 or 4 houses of similar condition and size and location to determine a new trend. So anyway, so I'm just trying to provide some context in terms of like what happened last year, the growth that we saw, and yes, we're seeing a little bit of a pullback in some of these areas, but truly this is like what I call a normalization of the market, because really what we saw last year was not normal and certainly not sustainable over the long term. So when we look at asset class changes, like this is actually a really interesting one to look at too. When you're comparing detached, semi, towns, and condos for all the different areas, like, across the board, like, again, like what I was saying, like Durham was really leading the pack, and look at Peel and York, like some of these numbers are really, really quite impressive when you talk about like an average price or HPI increase. Really, like that's not sustainable long term. So like I wouldn't entirely be surprised, like once we see a few more interest rate increases, that we'll see a little bit of a leveling off. But again, look at where we were a year ago and compared to where we are now. That's this is what we're looking at. But like, so the question that we often get, like, if you're a first time home buyer or trying to get into the marketplace, like, is now a good time to buy? And really, it really depends. Like, it really depends on your individual circumstances, and like, like how long you're looking to live in this specific house or condo, what your time horizon is, what's your plan, like what is your long-term goal when it comes to real estate, how old are you, like what age bracket are you in, are you going to be most likely moving in 2 to 3 years since all these things matter. And so like I can't just say like, yeah, now is an amazing time to buy, or no, it's a terrible time to buy. Like I can't answer that generically on a YouTube video, obviously. But like if you have questions about your individual specific circumstances, like we'll have a link below to schedule a time to do like a 15 or 30-minute phone call. We'll ask you some very pointed questions to understand your situation and also help you determine whether now is a really great time to buy, or maybe it's better time to wait. And again, it depends, but we don't have a crystal ball. We certainly can't predict where real estate prices go, but certainly what we're seeing now trend wise is that we're likely going to see rates continue to rise, and that has a natural correlation against rising prices. So likely we're going to see continued softening in prices moving forward for the next few months. So days on market, like unsurprising that when you're looking at the market that we have been in, we're at 11 days on market. Again, that's still very low by historical standards. So again, these numbers would suggest that if you've got an attractive property in a good area or good location, it's going to sell relatively quickly. And again, 11 days by historical standards is excellent. So months of inventory, again, we're down 0.9, which is like unbelievably low. And that's something that, isn't exactly surprising given that some of the metrics that we just talked about earlier from an inventory standpoint. Anyways, thank you so much for watching today's video. I went a little longer than I wanted to, but any questions, comments, or